How's it going, everybody? Welcome to Chart Request Live on Stock Market TV. We do this every Tuesday and Thursday. Tuesday, JC hosts the show. Thursday, I host the show. We have a special guest today. Patrick is going to be running the chart requests and running the chat. What's up, Pat?
How are you? I'm excited for this, first time on, but we're gonna see if I got big shoes to fill, but
Big
I think
day,
I can do it.
big day for you and I here today, huh?
I know, but I'm having fun so far. You?
So much fun. This is great. So, guys, the way this works, most of you are probably used to it by now. You come on in, watch the show on YouTube, not live on Twitter. Drop your chart requests or your ticker requests into the chat, and we'll get to them. Listen, I want to chart whatever you guys want me to chart. I'm watching some things this morning. You got anything to start with? You got the chat up, Pat?
So actually, point me to the chat real quick.
YouTube.
Okay, got you. Getting there now, but why don't we start off with Beyond Meat? You were mentioning earlier that a bunch of heavily shorted names are really starting to make some moves. So, that strikes me as one of them. Why don't you break down Beyond Meat first?
Every now and then, like, we get this type of data that is near impossible to quantify, but speaks to risk appetite, right? And I'm talking about most heavily shorted stocks going up. Really hard to quantify this. We don't have an index that we can look at. You have to be aware of the list yourself, which we do internally once a week. And when the most hated names, right, the names that investors are positioned most bearishly against are ripping, are up, in the case of Beyond Meat, 18%, or in the case of Carvana today, up 50%. It's probably not a bear market if the most hated stocks are catching flows, right?
Yeah, absolutely. I mean,
So
that's been in a downtrend for a while now.
let's zoom in, though. Let's zoom in. So here's the thing with charts like this. We've talked about PayPal. We've talked about Zoom. We've talked about a lot of these charts that do not look good and are not in uptrends at all, probably downtrends. It's hard to say a stock like this is even in a sideways trend. It's either sideways or down, right? But I can tell you one thing. I don't want to sell this stock. I don't really want to sell any stocks today, based on what we're seeing, right? So with something like Beyond, I could draw some really clean support and now resistance at this 1150 level. Multiple touches last year, November, December. Got the pivot highs just from last month here. This is a daily chart. Squeeze is on. The squeeze is really on in a name like this. So let me check the short interest. I do not know the short interest of Beyond Meat off the top of my head. 44%.
Whoa,
44%.
that
And
thing's a powder keg.
wow, and it increased by 30% just over the past 2 weeks. Look, if we're squeezing back above this level, this is a stock I would trade. It's so clean here. If I can get this as close to 1150 as possible, when a short squeeze starts to take place, like Pat, you understand the mechanics behind how a short squeeze works. It tends to last a lot longer than one day, right? You usually get at least a couple sessions where we're squeezing higher, or even a couple weeks, right, where you get a really nice run. And you do want to get out of these fast, right? You take the move, you take your money, and you go wherever it ends up. Like, I don't really even like to use price targets with a short squeeze. It's just momentum. When that momentum ends, you want to use like a real tight trailing stop and be out as soon as the squeeze is over. But you usually get follow through. Today is the biggest move for Beyond Meat in, gosh, a very long time. Let's check on that. Let me flip back to my other chart format here. Thank you, friend.
Steve, that's exactly how I would have drawn the level too. I mean, you have that little fail breakdown there. If you want to call it a bear trap, whatever you pleases you.
Yeah.
But that's how I would have drawn it too. I would be interested to see what RSI looks like. I would bet you there's a divergence there. I would bet
Yeah.
you that RSI did not make a new low, but we'd have to check on that.
Good call. First, I just want to point out, like, this is the biggest move for this stock since, all right, only February. But look, 18% is nothing to, balk at here. Let's check out RSI. Oop, that's correlation. You really didn't get much of a divergence, to be honest. No,
Oh, wow.
really didn't get much there. Listen,
Yeah, a little short term one, but not the one that I was talking about, the previous low I had been talking about. But if you want to move on, somebody in the chat mentioned ONON. I know that's a name that you've been looking at quite frequently. Why don't we bring that one up? And guys, just keep the tickers coming. Any tickers you want, just keep them coming. Drop them right in the chat, and we'll have Steve chart them.
yeah, so look, I already have this one drawn. We've been getting asked about this one. Some of these shoemakers are really hot. Some of them, right? So you got the base breakout here. You got what we want. 200-day moving average flattened, is now curling higher, and a real textbook retest here, right? Just a few weeks ago, late May. So 25 is that level. You can get it around 28 today. Let's throw some fibs on here. See if that can help us define our risk. So that's it, really. I would be a buyer against 25. I think you can target about 40-50 in this one, the 62%. You want to get as close to the base breakout level as possible, though, right? I mean, this one's corrected pretty sharply on earnings since May. We'll see. The base is intact, though. The base is very much intact as long as we're above 25.
How about Uber? Let's take a look at that one.
I like Uber.
You know, it would be an interesting ratio to look at, Uber versus Lyft. I've seen a couple people do that.
Oh, it's not even close, man. It's not even close. This speaks to that like bifurcation, even within industry groups. This is Uber relative to Lyft, right? So if you want to make an investment in the ride hailing business, Uber and Lyft, very close competitors. They do the exact same thing. And anytime you're looking at close competitors, whether it's Pfizer or Merck, you know, two railroad stocks, two ride hailing stocks like this, Square versus PayPal, right? Just chart them against one another, and buy the strongest one. In this case, it's been Uber since 2022, just killing Lyft, like really strong primary uptrend here. So we don't want to be in Lyft. If we do want to invest in this space, we want to be invested in Uber. And look, it's got a lot of the things that we're looking for here. 200-day moving average has flattened and curled higher. I can draw a pretty clean level right here at last year's highs from August and September. We got the breakout. Now this is, you know, short-term continuation pattern. Draw it something like this. I would buy the breakout of this short-term continuation pattern. Let's see where the fibs rest at to give us some sort of idea about a price target. Look, not bad. You got the 38%, which usually tells you that like the reversal's on, a 38% retracement, right? Typically, if you get 38, you get 62, which is why we use these levels. So we're high and tight here, just beyond the 38%. You can buy a, you know, bull flag resolution from this at 40 with a target at 46. It's not a huge profit potential, 10-15%. It's a nice trade. And these short-term continuation pattern resolutions are some of the best breakouts to buy, right? In fact, they work a lot more consistently than like a big base breakout would. A lot less likely to retest these short-term bullish patterns. So I would say 40, Uber, play it to 46. And then from there, once we're at 46, those all-time highs are in focus. So just north of 60.
All right, next up we got Enphase, ENPH from James.
People love this one, and we loved it for a long time also. We're talking about solar energy here. Look, I'm going to do a weekly chart and just show you guys why we've all loved Enphase so much for so long. You know, we fibbed this one out a million times, continues to hit price target after price target. The fibs have been such a great roadmap for this stock. This is one of those charts, Pat, like I mentioned on the morning show, that it's just burned in the back of my brain, which is why I just fib like this.
Look at that uptrend post 2017. I mean, whoa.
And this is, you know, really since, like you said, since this just massive structural trend began, this is the longest corrective phase we've had. I really, you know, I'm interested in this one a lot higher than where we are today, back towards 300. We're trading at 180. So for expressing a bullish thesis on solar energy. And again, that was the weekly chart. Now I'm zooming into the daily. This is what I'm talking about. You know, this is a big mess now. Secular leader, but range bound. This is trendless, right? You got the 200-day curling lower, cresting over price. Can I give you my favorite name in solar right now? Listen, we like Enphase. Like I said, it's been good to us over the years, but this is the one for today. This is Array Technologies, ARRY. Not going to see a base much cleaner than this.
Wow, look at that level is clear.
Look at these touches, right? You buy it on strength. You know when it goes, it's going. 25 is that level. You can play it back to its all-time highs north of 50. It's 100%. All right, you're getting a double in this one. This is what the charts we want to buy today look like. Right? These are the bases we're interested in. This one's textbook. 25 to 50. I like Array Technologies. This is the way to express a bullish thesis in the solar energy space right now.
All right, Steve. Next up, we got OIS. Wavy McFly is asking about OIS. That's Oil States International. Guessing it's an energy name.
Well, I know that much, but I've never heard of this. Let's see what they do. This is an MLP. I could tell by the way the chart looks. No, I'm wrong. No yield.
Interesting. What would have given you that tell?
Because it looks like a midstream operator, because most of them have never gotten back to these 2018, 2019 highs. Like they never even got back to like the COVID pivot highs, a lot of these. So what am I talking about? I'm talking about MLPs. Doesn't that look like the MLP index? This is the Alarian MLP index.
Yeah, it does. I see what you mean now. Yeah, that makes sense.
We're not even back to these prior cycle highs. We're not even close. Most energy stocks, we're talking about the 2018 highs. These midstream operators, these pipeline companies, they all look like this. And you said OIS, right? Yeah.
Yeah, OIS.
That's what I'm saying, right? Look at how far we are from these 2018 highs. So this is a sector laggard. Let's see what they do. Oil States International engages in the provision of manufactured products and services using. Listen, most companies involved in drilling and offshore stuff or shale things are doing well right now. This one's not. So just based on that alone, I would say, you know, there are better offshore oil companies to get involved in right now. I'm talking about Rig, Transocean, a lot of these drillers. This one I don't love. Here's where I would say, okay, got to break out of this big base here, right? You can ignore this blow off here, play it off the March 2021 and June 2022 highs, 950, 950. So still work to do. Big base. Maybe it gets there. Maybe it doesn't. I don't know.
Yeah, overall pretty flat trend there. There's better charts out there. I think you'd agree. Yeah.
By the ones that are telling us the path of least resistance is now higher. And by that, I mean by the bases that have completed, right?
Yeah. And keep the tickers coming, guys. But we've had a couple people ask about Twilio, TWLO. So why don't you break that one down for us?
This is one of those stocks I used to listen to all their earnings calls. Kind of been over it for a while now. Let's draw this up. Look, you got the 2018 lows, you got the post-COVID 2020 lows that kind of line up, and it's messy. It's not perfect. It's not going to be perfect. I'll draw resistance and support like that if I want to. It's bad as hell, right? So it's a range, 65 to 75. Okay? There's a lot of price memory here. This is a key polarity level. My biggest, hesitancy with something like this is, let's zoom in. Look at the 200-day, Pat, right? Like I know from experience that the ones that still have downward sloping 200-day moving averages are less likely to work. I'm not saying they won't work, but the odds are lower. If you give this 200-day time to flatten and curl higher, all that's telling you is that the base has had time to really build, right? You want to build a really nice little launch pad for a new uptrend. And that takes time. 200-day that's still sloping lower tells me it might need more time. Maybe it goes, but I wouldn't be surprised if it fails right at here, the 75-80 level, these pivot highs from this year. Looks like it needs more time, and especially like in the software and the tech space, I can show you competitors or peers to Twilio that look far better right now, right? It's a software stock. There's better names out there. I would focus on the leaders. Can I tell a story quick? before we get to the
Yeah,
next chart?
absolutely.
So did you hear me complaining to you guys in the analyst team chat?
About what? You-
I bought Micron like a week or two ago. I bought a couple semiconductor names, right? But I'm always focused on my losers more than my winners. And I'm sitting here asking myself, why am I getting stopped out of this trade? Semiconductors have been so good. I got 3 or 4 other names that I've been trading that have, given me really nice returns over a very short time frame. Why am I getting stopped out of Micron for a loss right now? Look at this chart. I bought the breakout, right? I bought the base. It all looks good. You got the upward sloping 200-day moving average. We're back above those August highs, really clean. All looks good in this chart,
oh yeah.
right?
Yeah.
You know what it was? So I'm writing this in my trading diary now. This is where I went wrong. And I'm so mad at myself because I come on here and I yell at people who want to buy weak stocks. This is Micron charted relative to the semiconductor index. So I'm sitting here just half hour ago, looking at my trade tickets, looking at my trade history and saying, the hell did I do wrong here? And then I pull up this relative trend, Micron versus semiconductors. I said, you idiot. You idiot. Right? Practice what you preach, right? Why did I buy this one instead of AMD or Avaga or NVIDIA? Right? Like, let's look at what NVIDIA looks like relative to semiconductors right now. That's NVIDIA. And now let's compare how NVIDIA is correcting and cooling off high and tight. Hasn't even tested the gap low, right? Gap up low.
Yeah. I
And
think
then,
you got to see that as constructive, right?
let's look at how Micron corrected. Well, of course, the stronger stock is correcting sideways while the weaker stock is correcting lower. Listen, if you want to lose money, buy the losers. I made a big mistake here. I'm happy to share it with all of you because it's such a good lesson. Buy the
Well, listen,
strong.
I think that's big of you to share that, and point out your mistake there. It's
Pat,
like JC says, that's why he calls relative strength the cheat code, right?
I lose money all the time. That's what has made me a good trader.
Yeah. And you learn each time, If you're not learning, then you're not doing it right. But a couple people have asked us about MLR, that's Miller Industries. Why don't you
Yeah.
take a look at that one?
Mm-hmm. This one came up the other day too, and I called it. This is the dump truck company.
Oh, okay. What does
No,
that fall under, industrials or?
tow trucks. Yeah, industrials.
Okay.
Towing, recovery, and equipment. Yeah. Motor vehicles. Yeah. So 2% yield on this one too. It's a small stock though, right? 400 million. We would consider this a small cap. I'm sorry, a micro cap, not even a small cap. So let's drop the fib on this. Lines up pretty nicely. You don't have to use the 62% here. You can use the pivot high, so call it 36 instead of 37. And really, you want to be targeting the 2021 highs. So I don't hate this. Let's check the relative trend, though. This is MLR versus industrials.
Look at you. You're learning from your mistakes.
That's it, right? So that's it. Yeah. This is good. Nice base, big leg up. Real strong automatic reaction here from March to early April, and then high and tight sideways. I'm okay with this one. It's also in the right area. By that, I mean it's a small cap. It's an industrial. It's maybe a transport or something like that. It's a cyclical stock. It checks all the boxes of the groups that we think are catching rotation right now. Small, cyclical, industrial, value, not growth, right?
Oh, yeah.
I
Would
think
you like a softball? I got a softball for you.
I always like a softball.
How about IWM, the Russell 2000 ETF?
You know how I feel. That's
Well, I think it's an important chart, so why don't we break that one down?
yeah. So let's start by zooming out, right? This is how we're looking at the Russell 2000 over longer time frames. I think we talked about this morning, Pat, right? Like it did everything we needed it to do. Okay. And by that, I mean, you have these prior cycle highs. This is 2018. This is pre-COVID, early 2020. and we came down and tested this key level. And again, your support and resistance should be drawn thick, like a crayon or a highlighter, not a pencil. Real thick. For here, it's 173 to 163. And people they hate this. Like, oh, it's not just 170, 163 to 173. Yeah, that's the truth. If I told you 170.53 is the level to the penny, I would be a terrible technician because that's just not how markets work. It's a range here. We have the big test and the peak in 2018. This is when risk assets peaked the last cycle. We have the pre-COVID highs, same level, peaked and rolled over. Then we gap right through this level. No surprise that you get a major gap right at that level too, right? At that polarity zone. Go on a nice run into 2021, a big topping pattern here. Resolve lower from this nasty top. And where do we go? Right back to that same level. We tested again in the summer of last year. And then we tested again and again and again and again. And the bulls keep stepping in and defending it. That's telling us, okay, if it's not going to break and small caps won't go lower, they've already been going sideways for more than a year. Can't go sideways for too much longer. There's only one other direction, and that's got to be up, right? So let's drill in. Let's look at a shorter time frame now and delete these markups. This is now the Russell on a daily time frame, right? Came down to this level again, tested it again. Let's zoom way in here. I'm not going to draw it because drawing arcs takes way too long on TradingView. But really an inverse head and shoulders. It's a rounding bottom. It's a reversal formation over a shorter time frame. We took out this 180 level. We got the pivot highs from April and May. Took it out with authority. Took out the 200-day moving average. I'll even drop a anchored VWAP from the year-to-date highs. Comes in right around that 200-day, right? Kind of kept a cap on prices the past few months. We get that breakout. Now we're getting a reaction higher. Here's where we're going. Going back to $200.
Steve, what about the AVWAP from the peak for IWM for the Russell 2000?
Yep, totally.
We above, we below.
Ain't that the level? There's your near-term resistance, right?
Yeah, and it coincides with those August highs from last year. You know, that bear market rally. It was a vicious bear market rally last summer.
Yeah, totally. Look, that 190 level's big. The VWAP from the all-time highs. And you see how it kept a cap on prices here in March, here in August, right? Let's watch this level. If we take that out, definitely, going to test those year-to-date highs around 200. And then when you zoom in, you look at that year-to-date VWAP, kind of kept a cap on prices in the same way, right? This is why we use this tool. It's so good. Love Brian Shannon. Shout out. What's next?
Yeah, and I'll just add real quick, now that we've broken some support levels, we've seen some constructive action from small caps or really just in general. Whenever you break levels like that, you want to then start see them acting as support. That just kind of adds confirmation to a move higher. Would you agree?
It's the market reminding you, hey, this is still an important level. We might have violated it in one direction, but it's still important, right?
Right. So up next, we've got a couple requests for BSM. Have you heard of this one? Blackstone Minerals.
Yeah, I have. This is an energy stock, I believe.
Oh, wow. Those levels are pretty clear.
Yeah. Yeah, so it's exploration of oil and natural gas. I think it's one of those like oil and gas royalty companies, right? They more or less own properties.
Okay.
All the best oil and gas companies are from Houston, Texas. Shout out. UConn wins the Final Four there all the time. So 11% yield. Here's the problem. If this is real and TradingView's data is correct, and I'll double check it now just to make sure. If this company's really paying you 11%, I don't want it. I don't want it. I don't ever want to buy a company that's paying 11% dividend. Yeah, that's real. 11.7%. You know what that tells me? The market, who is smarter than me, the market doesn't believe that dividend is safe. The market doesn't think that that's going to be an 11% yield next year. Does that make sense? Like, you get what I'm saying there? If the market is pricing a stock in a way that the yield, because all the dividend yield is price divided by the dividend. If the market is pricing a stock in a way that the dividend is in double digits, the market is literally telling you that that dividend is not safe. And again, I'm not one to question it. I've been doing research on dividend stocks for too long now. The best dividend stocks, 1 to 2%. That's it. Because you get the price appreciation and you get the yield and it's safe. They usually have very low payout ratios. I'll bet this one's payout ratio is like 80, 90%. No, it's not for me. That right there tells me it's not for me.
Yeah.
Look, chart's fine. So if you want me to mark it up and pretend like I didn't just see that dividend information, it would be this shelf of former highs here. This stock IPO'd back in May 2015, 1850. And that's been the level, right? That's been the ceiling for this stock ever since, for the last 8 years now. So 1850, no, 1950, I'm sorry. We take out 1950, sure, this one has my blessing. Maybe the dividend is safe after all, but I've seen these kinds of stocks turn out to be disasters too many times in my career.
All right. Next up, we got Starbucks. And then after that, I want you to take a look at a couple familiar ones, Bitcoin and Ethereum. I think they're worth a look, right?
Fine. We'll do Starbucks. We'll do Bitcoin and Ethereum. We've already gone over by 5 minutes, but we did start 5 minutes late. Then we're cutting it off.
Okay.
Dude, Starbucks. Yeah. You heard of this Dutch Bros too? Don't they?
I have. Yeah, that was one that actually, it's ticker symbol BROS, BROS. It actually showed up on the buzz a couple weeks ago. It was a nasty downtrend. We said, if it could reclaim those former lows, then maybe. I think short interest was in the high teens somewhere last time I checked.
Yeah, this one's shorted. Yep. So I heard them talking about this on the financial TV when I was downstairs. Starbucks, here's the level. Got a nice little short-term top here. Don't love that. We got earnings coming up in August, so not much going on right now. Yeah, I don't love this. Not one of the better bases. I guess it kind of completed the base here, but if this top goes, I think you want to be careful. Pat, I don't normally do this, but there you go. All right, so the trend has changed a little bit, breaking this downtrend or this uptrend line that dates back over a year now. And we've had a path of higher highs, higher lows, higher highs. Looks like we're about to make a lower low here for the first time in about a year. I don't really want to get into a trend that's changing character to the downside like this. So this one, I want to see this top fail, reverse higher, maybe be a buyer in the 110 area in the future. But Starbucks not looking so great over the short term.
All right. Did you want to take a look at Bitcoin and Ethereum? We got a few others, but I know we're looking to wrap it up in a little bit. Oh, silver. I think that is definitely worth a look right now. SLV.
We'll go to silver. Let me just comment on Bitcoin and we'll be done with it.
Sure.
Here's the thing with Bitcoin. New rallies tend to start with failed moves and bad news, right? Kind of rhymes, bad news, failed news, whatever. And this is what we had in Q1. So if I could just point this out. You know what happened here on March 9th?
No, what happened?
Silvergate and Signature Bank within like 4 or 5 days disappeared. They were the on and off ramps for crypto, right? The brokers and the exchanges bank with Silvergate and Signature Bank. The government said no more on off ramps for crypto. We're shutting this party down. Bitcoin made new multi-month lows and then rocketed higher.
Wow, look at that.
On some very bad news for the entire industry. What happened here the other day on June 5th? Monday of this week.
That SEC news, right?
The SEC is now going after not the on-ramps, but the middle office, right? The exchanges and the brokers in crypto. They sued Coinbase and Binance. Mind you, FTX, the other big broker and exchange, is gone now, so they're coming after the two largest brokers and exchanges in the space. What happened? Bitcoin flushes lower, makes multi-month lows again, just like it did in March. And is it about to rocket higher again? Bad news and failed moves is how new rallies begin in crypto. That's all I have to say about that. You agree?
Yeah, absolutely. But I know you want to wrap it up, but before we
Silver.
go, I really think we should take a look at silver.
Silver. Yep.
Looks like it's having its best day in a couple months. Up, what is that? Am I seeing 3.5%? Is that correct?
Silver futures. Three
Huh.
and a half percent. I mean, hey,
Well, I'm
listen.
looking at SLV, but yeah.
Yeah. Nope. I hear you, and we will. Look, it's a messy chart. It's a giant range. Silver. Like we draw it something like this. This is silver futures, like you mentioned, Pat. Just a
Steve, do you remember when they tried to do when all the Reddit crowd tried to squeeze
yeah,
silver?
yeah. That was right here, dude. No, it was January 2021. It was right here.
Well, it's pretty much been range bound since, right? To your point. I mean, that's kind of when the range started.
Same range. Pulling up the iShares Silver Trust now. This was it, Pat. It was late January of 2021. After the Reddit crowd had success with other meme stocks, they thought they could corner silver. Didn't work out as well. That was the high, dating back like at
Look at
least.
that candle too. I mean, it just gapped up, sold off, and then gapped lower the next day.
This is exactly what exhaustion looks like, right? So look, you're right. Big day for silver. Precious metals have been beat up since May, right? So about a month of corrective action from this group. But here's what I'll look at. Let's zoom in, right? We know that the primary trend is in a range. I just proved that. But the tactical trend showing a lot of promise here. Okay. We bottomed the same time that risk assets bottomed, interestingly enough, last fall. Built out a nice base here. Launched higher from it. Right? And then we got a higher high, a higher low, a higher high, and it looks like this was just another higher low.
That
Right?
is a short-term uptrend.
Yeah, exactly. That's all you want. So now what we're looking for as technicians is, now do we make another higher high? And if we do, then it tells me that the odds are continuing to, increase, that we do break out of this broader range eventually. But I'm not going to have conviction, precious metals or silver at all until we're out of this range. And the same is true for gold, right? I could do the same thing for gold. We've all been talking about this same range for 3 years now.
Well, and the big difference too is like, silver hit that high in 2020, but at the same time, gold also was doing well hit at the same time. That was an all-time high.
Sorry, my YouTube. Yeah.
You know what I mean? So basically, what I'm trying to say is like silver has a long way to go before we're talking about all-time highs, or at least for SLV. It's a long way away from the 47 all-time highs that were hit back in 2011.
I think what you're saying, like gold is a lot stronger structural.
Yeah, that's what I'm trying to say. You said it a little more eloquently, but yes.
Nikki Boons, we love you. Request Valvoline tomorrow at the morning show, and we'll talk about it then. But we do have to hop right now. This was fun. Thanks for joining me today, Pat.
Yeah, absolutely. Thank you for having me.
All right, bye, guys.
Cheers. Thanks, guys.